So finally, Ford has settled with the UAW and a strike will soon be over. But is it too late? How much will Ford need to raise their car prices? Today, we'll review a video of Ford ex-CEO Mark Fields sharing his views on the impact to Ford, and he tells it straight. As a bonus, we'll also cover his reaction to GM and Honda canceling their EV joint venture plans. So today we have Jeff Lutz with us. He's going to help us walk us through all of this. Welcome, Jeff.
Great to be with you.
Okay, so let's go through this. This is ex-Ford CEO Mark Fields, and we'll listen to what he has to say.
Hey, Mark, it's Phil. I have a question for you. They're estimating that this contract will add $850 to $900 to the cost of every vehicle that they're building. Now, you can't pass that all on to the customer. They're hoping to take some of that out through greater efficiencies, cost cutting. But you ran Ford. You know it's not easy to strip out the costs when you're building a vehicle. How tough is it?
Well, Phil, as you know, the auto industry, it's all about, getting scale economies, and pennies count, right? Because, it gets into the cost of the vehicle. You're producing millions of them. Listen, at the end of the day, as you said, part of this cost is going to be passed on to the consumer, right? Just like, when you go and ship a UPS package, it's going to cost you more because of their contract. But at the end of the day, they're going to have to work and grind it out in terms of look at efficiencies in the system, look at their G&A costs to try and take out as much as they can. Because, listen, as you saw from the results earlier, the ICE business really funds the EV business at this point. And so, you got to keep that golden goose, keep producing for them. So they're going to have a very intense focus on this. And ultimately, it's going to wind their way into product decisions going forward in terms of where they produce some products. What might have been, producing in the U.S. maybe 3 or 4 years from now, they might rethink that. But they're going to grind it out, and they're going to pass some of this on to the consumer in terms of pricing.
You mentioned that Shawn Fain sort of blew up the model for negotiating and for calling the strike. What grade would you give him, Mark? And do you think this changes forever the labor tension, the way that labor unions go in to negotiate with management?
Well, we're in a point in time, right, where we've had a lot of inflation. We're going through an economic slowdown, et cetera. So part of it is, horses for courses, right, where you are in a point of time. I think, in terms of the grade for Shawn Fain, I mean, listen, he's gotten a record contract for his rank and file. But I think that's the short-term look. It's really the long-term look of, how are these business positioned competitively, right, to continue to grow the base of the rank and file, because that's the business model for the union going forward. They want more members. But, overall, he's done a very effective job by, breaking, past practices. And at the same time, at least for, the automakers, and particularly Ford, because they've led in this, at least they were able to shape the contract as best they can for their situation, which now others are going to have to follow.
Okay, Jeff. So he said a couple things there, right? One, he said that Ford's likely going to have to raise their prices to cover the cost of the strike, increasing employees' costs. And then he also said that they might actually, do something where they might change the factories to be somewhere else, not the U.S. That was interesting. So you've run factories before. What was your thoughts?
Yeah, they've got a balance sheet. They've got a cost structure, and they've got to figure it out. The estimates are, anywhere from $500 per vehicle in the first year to maybe up to $1,000 a vehicle that are the impacts of this contract. And that is if Ford can hold, their volume in North America, which I think is around 1.7 million units. If they have an appreciable decline, that cost impact for vehicles and it go up significantly, which means they've got to go find more dollars. So Mark said looking at G&A, which is general and administrative, so it's kind of all the overhead functions, because this labor contract is really kind of everything outside of the management and the factory, and that's where Ford's going to have to go look at from a cost structure perspective. They're also going to have to go look at how their cars are designed, and are there ways to simplify it. They're just not as nimble and not as quick as Tesla is being able to roll those changes in and take the cost structure down as much as they'll need to. So they're going to have a drag on their earnings. I think that's one of the key points. The other key point is, as you have all these sites. They have so many different sites doing so many different operations. Can they consolidate? And then of course they have these companies, both GM, Ford, and Stellantis. They have massive operations in Mexico. Now, what the union has been fighting for has been the ability to keep plants open in the U.S. So Ford doesn't play that game, whereas the other automakers don't play that game of, all right, we'll agree to this contract for the labor in the U.S., and then we're going to move a bunch of product to Mexico. I don't think the contract prohibits them, but I think there's certain sites that they're either going to reopen or have to be open for some period of time. And then they also have the clause, I think, to strike again if they need to, the UAW. So the UAW definitely, they definitely made out, I would say. They did a good job. By the way, I'm not saying that labor doesn't deserve a raise, but if you just look at kind of this whole piece together is did they, win this battle and then lose the war? The war is surviving and thriving as a growing, global automaker. Can they get themselves back in the position of even exporting? Right now, we're just talking about U.S. manufacturing for U.S. destinations. So the question is again, if they won the battle and lost a greater war. And I think we'll hear a little bit from the UAW as well on that.
And before we do that, so he talked about Ford. Now he's also reacting to GM and Honda canceling their EV joint venture plans. Let's watch what he says here.
And then there was more EV news from Honda and GM scrapping plans to co-develop affordable electric cars. That partnership expected to produce an electric car that would cost less than $30,000. It was slated for a 2027 release. The initiative launched just last year to a lot of fanfare, $5 billion capital commitment. Mark, is it too late to reverse course for all of this EV industry? So much enthusiasm, so much committed dollars?
Well, I think over time you're going to see the industry propulsion system shift from internal combustion engines to full battery electric. Right, to your point, the issue is, what's the time frame for that? And what you're seeing when there's a lot of excitement around the early adopters and what does that mean for growth going forward? Now you're getting to the tough part of mass adoption. And I think in the case of Toyota and in the case of Ford, they've been pretty smart in saying, listen, we're going to invest in EVs, but at the same time, we're going to invest in hybrids, which if you think about it, hybrids and plug-in hybrids are a great transition for consumers. And also they're very good for, reducing CO2 and helping the environment. But, I think, at the end of the day, we're going to be going towards a full EV future. But you're seeing the manufacturers like Ford and others now starting to say, hey, the growth is not there as we expect, so we're going to push out our capital expenditures and at the same time invest in hybrids to give the consumer a choice. And I think that's a smart move by both Toyota and Ford.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com. Okay, what do you think, Jeff? Is that a smart move?
They're forced into that right now. They don't have another option in terms of Ford and going the hybrid route. They don't have an EV where the unit economics are greater than zero for gross margin. In fact, they're negative 75% EBIT margin. I was looking at some of the math. If Ford actually ramped their EV division, instead of doing in the 20K range, they did closer to 80 to 100,000 units where they should have been at this point in time, they would have wiped out the margins from their other two divisions, their Ford Pro division, and their ICE vehicle division, basically wiped out all the margin of the company and taken it to zero if they'd ramped, EV up, since they're losing so much in EV. And then this GM Honda tie-up. I mean, just think about some of the GM lines that have been cast out over the last 2 years. You had Nikola and a multi-billion-dollar tie-up with Nikola that went to nothing, and then you had Lordstown Motor. So GM has been basically saying, like, we're going to be the leaders in EV. We're going to have all these models. And then meanwhile, their board is agreeing to cast this line with Lordstown, cast this line with Nikola. And now they casted this line with Honda, which they're now, they're breaking that up. Who knows how much was spent on that tie-up. Those tie-ups are very difficult Like who's driving the gross margin structure in that? Who gets what in that agreement? Those are very difficult things to kind of sort through. It almost never work out where there's some dramatic breakthrough and it's business changing. So I can see that. And again, where Ford is they're basically forced into this move now with having to drive hybrid because they're nowhere on EV right now. Every EV they ship, they're basically stuffing, I think it's $37,000. So basically they could ship they could give all of their consumers a Model 3 for free in terms of the value that, they end up shipping. It's crazy. So and I talked about this before, you can't scale these problems away. When you have poor unit economics, you're inefficient, your designs are inefficient, your approach to manufacturing is inefficient, your supply chain's multi-layered with very high latency, you can't volume that stuff away. Yeah, they could have gone from losing 75,000 to maybe losing 20 or 30,000, but you're comparing that to Tesla, making 17 points of gross margin and throwing off, thousands of dollars of cash per unit. So they're nowhere, and they have to push this route right now with hybrid. So this is going to be interesting to watch over the next couple of quarters, but they've definitely all basically motioned towards capitulation in EV right now.
Well, talking about GM, they're in really big trouble. So we've heard now that Ford is pretty well settled with the UAW. Now we're going to show that Stellantis seems to have settled with UAW. GM's left again to be the last, which is the worst scenario because now they're desperate. Let's listen to Sean Fain talk about this Stellantis deal that they've negotiated.
I join you here today with Vice President Rich Boyer to announce yet another major victory in the stand-up strike. Today, we reached a tentative agreement with Stellantis. Today is the 44th day of our stand-up strike. 44 days. We called it the stand-up strike as a tribute to the sit-down strike, which built our great union almost 90 years ago. The sit-down strike showed the incredible power of regular working-class people to fight for economic justice and win big. After 44 days of occupying the GM plant in Flint, Michigan, the UAW announced victory. On day 44 of our stand-up strike, I'm honored to announce that our union is again victorious. Once again, we've achieved what just weeks ago we were told was impossible. The power of the stand-up strike cannot be understated. Over the 44 days we were on strike, Stellantis more than doubled the total value of the proposals they had on the table. At Stellantis, we not only secured a record contract, we have begun to turn the tide on the war on the American working class, and we truly are saving the American dream. As you know, in our union, the members are the highest authority. That means we have a process for rolling out the details of the agreement and making sure every member gets a chance to make an informed decision. This video is not even close to the full highlights or everything we won in this agreement.
Oh boy, he speaks a little too slow for me, Jeff. Go ahead.
Yeah. So they have a deal now with Ford and Stellantis, and the headline on labor is roughly at 25% on the hourly wage, but then they have this something called COLA, cost of living adjustment. It brings it closer to 30%, which is how do these workers deal with inflation? And then there's all other kinds of benefits in there with pension, time off, paid time off, and so forth. Again, I'm not against labor getting a raise. They should. And the question is where are these companies on the other side of this, and do they have a path to win? So I think we're going to hear a little bit more about some of the, Sean Fain kind of mentioned about, saving the American worker. And they're going to talk about, that they've been able to save certain plants. So we'll listen to that. But again, what does that mean? What cost structure are they going to be able to operate at? Are those products, are they going to be successful? And, again, did they fight the battle, win the battle and lose the war? I think that they believe that after they deal with the big three, they're going to go look at Toyota, they're going to go look at Nissan, they may go look at Tesla in California or even New York with solar and chargers. Who knows? I don't think anything's off the table, but I think I think the UAW coming out of this is a lot stronger than the UAW going into this, and to not think that, I think it'd be a little bit naive. So I think we have to watch in terms of what they do beyond the big three.
Okay, thank you so much, Jeff. Let's continue listening, this time to Rich Boyer, the vice president, talking about the plants that they saved. Watch this.
Thank you, President Fain. I want to speak to something close to my heart. 8 months ago, Stellantis idled Belvedere Assembly Plant, putting 1,200 of our members on the street. This company ripped the hearts out of that community. Stellantis didn't care. Brothers and sisters, we made them care. From the day I heard they were coming after Belvedere, I swore one thing. We weren't going to let them kill another working class community. UAW family, it is with my great honor to announce that we saved Belvedere. Again, we have saved Belvedere. From the strength of our stand-up strike, we will bring back thousands of jobs to Belvedere. We have won a new vehicle at Belvedere. It will be a mid-sized truck, and we will have 2 shifts. In addition to the vehicle commitment, Stellantis will also be adding over 1,000 jobs at a new battery plant in Belvedere. We got everyone who lost their job at Belvedere put back on temporary layoff, meaning they'll get sub-pay and health care until their job is back in Belvedere. Under our contract, members from Belvedere who have been scattered across this country will have the right to return back home to Belvedere.
What do you think, Jeff?
Yeah, a little bit close to home here. So Belvedere is about an hour and a half or so outside of Chicago, northwest, basically. So I think I just looked, it's about 45 minutes from me. So yeah, this is I think the interesting thing here is, what are the economics around this? So they've got to, figure out, this mid-sized truck, is it an EV, it's a combustion vehicle, and they're also talking about a battery plant operation. There's battery plants all over the country now that are being created, obviously, all the way from, in California, Nevada, Texas, they're all over now. And so there's no reason why a plant in Illinois can't be competitive. The question is how? What's the plan? What's the partner involved in this? So I know Stellantis had to make a promise here, because in the crux of this deal, what the UAW wanted to protect against is, getting the headlines, the wage deal done, but then actually losing the business out the back door, to Mexico and maybe other lower cost states. So part of this deal was getting Belvedere, which is, again, about an hour and a half northwest of Chicago, getting that plant reopened and getting it stocked or getting it staffed for a couple of shifts, as well as a battery operation as well. So promises made. And what the UAW is saying is they can strike if those promises aren't kept. So this is going to be a difficult, interesting situation, because Stellantis has a big operation in Mexico as well. So at some point, like, the balance sheet has to come in here, and has to dictate what happens. So let's see how this plays out. UAW is not only getting wins on the, kind of the wage side of it, but also trying to maintain plants, which will help them grow their membership. So I think that's the key.
That's the
key thing they're driving
driver.
at.
Okay. Thank you so much for explaining that to me, Jeff. That's fantastic. Please follow Jeff on X at the Jeff Lutz. Thanks, everybody. Bye.
Thanks, everyone.